Oh, we don't want that. Let's go. Oh, let's go. Let's see if market bounces here if we get dumpy dumpy. Okay, looks like market wants to hold up. Hmm. What oh what should we bring up? Market rejecting. Let's see, let's see. Spy holding up pretty well here. Okay. We're getting a pretty solid bounce here. Holding our trade still. We are long on ES. Let's take a look where we sit. We're still down on our position. Entered a little too early. Let's see if we get that break. Good opportunity to average down, but just seeing where we hold. I want to see a 15-minute candle closure here above around 599. We'll see. Hmm. Pretty solid. Pretty solid here. Okay. Won't average down just yet. Not just yet. Let's go. We're getting that slight push up. Okay, okay. Down about 200 on my current position. Again, I'm long on ES. Aim 5. Eh, about 4 or so points down. Want to see this hold here on tech. Finance bounce. Looks like potential double bottom here on small caps, Russell 2000. Overall tech holding up. Apple struggling here at the lows. Let's see. Are you able to hear the background? Let me see. It might not be playing for you all. It looks like it might not. That's weird. I hear the toot 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 toot. Gotta fix that audio. So it should be this playing in the back for you all. No, you can hear every type. Okay. Yeah, what is going on here? Very interesting. All right, let's stop that and reshare it.
Take into effect. Now, the House conservatives insisted Medicaid, for example, that it would start in December 2026, the Inflation Reduction Act 2028, all this being said. Now, what the Senate is doing at the moment is they're looking how to moderate take into effect.
Senator
start taking place in like 2029 beyond Trump's rest of his administration. That's where we think the Senate goes. Now, when it comes to Medicaid in particular, obviously it's a very difficult vote for a lot of Republicans that have either constituencies or states like 2029 development or beyond Trump's on Medicaid. You know, we think that most likely that those ultimate decisions, if you will, are going to be votes to kick the can and push those cuts off so that if a future president wants to come back and revisit it, that person would have flexibility.
Right, interesting. In terms of the feud between Elon Musk and President Trump, I guess it's a twofer. Like, one, where are we with that? But then more importantly, kind of what is Doge doing within the government without Elon Musk?
So it seems like we're sort of at a truce at the moment. Now, I say that, obviously, it could change almost instantly. But in terms of where we are with that, well, the White House sent what is known as a rescissions package, trying to codify around $9 billion in cuts. Now, this is mostly USAID, state, and NPR. We looked at it from an investment point of view, and we actually don't think there's much there market moving. But the reason why it's important to talk about is that this is the first of many rescissions packages that will come probably throughout the rest of this year. Now, the White House can essentially say, look, DOGE has identified these $1 billion number of cuts. Now we need Congress to go in there and actually approve this. Now, you don't need a filibuster. It's just a majority vote in the House, a majority vote in the Senate. But obviously, there are differences between what DOGE wants to do and what senators want to do. This happened one time in 2018, and the Republicans just said, look, I can't vote to cut these things that are ultimately going to impact my district. So we are going to continue to see things like clean energy, tax credits, loans, grants, and so forth like that. Those rescissions packages are most likely coming later this year.
Okay.
Last week, Alex and I were from Washington, D.C. area, and one day after walking around town, walking past the Department of Agriculture, which is a massive building taking up like a whole square block, and it was quitting time, and people were coming out by the thousands. I mean, I don't, it goes back to, we don't know what these people do, and I'm sure they're doing good work, but now that Elon Musk is out of the picture, is DOGE still a thing? Are people just going to come back into the federal workforce now?
Well, anecdotally, I would say, yes, DOGE is still a thing. Just talking to my friends and family around the region, they certainly are still active. And there are DOGE employees at pretty much all of these agencies. But I would say is that rather than being the bully pulpit of Elon Musk, now each agency leader is the one that actually has to make that decision. For example, over at the Federal Reserve, DOGE isn't there yet, or as much as I can tell, they're not there yet. But Fed Vice Chair for Supervision, if you look at Michelle Bowman of her speech for last week, it had a lot of DOGE elements to it in terms of saying, look, we need to get cut, we need to actually become more streamlined and so forth like that. So the idea of DOGE is certainly going through the agencies, but the bully pulpit of Elon Musk isn't there, so you will see cuts and you will see streamlining efforts continuing throughout the rest of this year.
All right, Nathan, thanks a lot. Super appreciate Nathan Dean, senior policy analyst, joining us from Washington, D.C. All right, the economic data that we got just at the top of the hour had to do with Fed inflation expectations for the short run, that 1 year falling to 3.2% versus 3.6% estimated. Michael McKee, Bloomberg National Economics and Policy Correspondent, joins us now. Okay, so are we celebrating this or what?
No, I mean, it's a survey, but...
Hey, 3% is close to a two-handle, I'm just saying.
Well, yeah, but the problem is it's still 3.2%. But it is good news for the Fed because it does suggest that people are not... We're not getting unanchored in our inflation expectations. And the explanation is probably that what we've seen is Trump taco. He's backed off on his tariffs. He's put on things on pause. And so people aren't quite as concerned as they were when we were going to have massive tariffs. We still don't know what the tariffs are going to be. So this doesn't settle anything, but it does suggest that people are still think that the Fed is
struggling at the 60-14 mark.
So we are on Wednesday and Thursday going to get some inflation data. Wednesday, the CPI. Thursday, the PPI. I don't see anything else really jumping out at me. When are we going to start seeing inflation data, if at all?
Well, on Wednesday and Thursday. I mean, both of those indicators are expected to rise on a year-over-year basis. The CPI going from 2.3% to 2.5%.
Okay.
And the core to 2.9% from 2.8%.
So we're seeing,
that's going to be the first rise that we've had in a long time. And so already forecast. So does it have a big market effect on Wednesday? That's hard to say. You know more about how traders think than I do. But it will be the first real evidence that there is some sort of effect. And then PPI will be even more so because much of what we import is and tariff is intermediate goods.
But then that gets so confusing because then you have any sort of preemptive buying before that and stockpiling and inventory build, which will distort PPI also. So, I mean, again, getting that clean read is going to take a while.
Well, it's going to take a while, and we still don't know what the patterns of buying are going to be. We did have the big pull forward of imports in January, February, to a certain extent March, and then in April we saw a big reversal of that. These are going to be May CPI, PPI figures, so they should give us a more clean read than we've gotten to this point. But then what happens when we get tariffs numbers? Do they lead people to once again start importing stuff? Do they lead them to cut back on importing stuff or change what they import? So it's impossible to really make a conclusion out of
60,
anything
14,
at this
60,
point,
15.
which is why we send Anne-Marie Corderin over to London,
Yes.
hang out with
Let's
Scott
see
Bessent and
price
try
holds
to get
here.
an answer.
I mean, I guess that's going to be potentially important. I guess what we hear out of London here. I'm just not sure if we're going to get any news, but
It's midway of that.
I guess the market's discounting
right?
some base level
VWAP
of
right now on the
tariffs, it
SPY
seems
here.
like. I mean,
Well, it seems that they have priced in maybe the 10%.
VWAP.
Have they priced it in effectively? There's
Looks like it's falling below.
It's funny, the people who are on the trading desks are making all these trades, and we're seeing
Yep.
the markets go up, and then the analysts who are sitting back going, these guys are nuts. So do we? It's kind of hard to say where we're going to end up with this, and whether or not there's oh geez moment at some point when the markets say we really didn't think that it was going to be this bad.
Or have we already seen that? And is it just more like less bad news is actually going to be more supportive for the market? And then if you get any kind of actual trade deal with some other country than the UK, does that wind up being good for the market?
Well, and remember, the UK is not a trade deal. It's a deal to talk about getting to a deal. So
and also, we don't have a deficit with them, so there's that.
Where do we all, where
Yep,
do we end up with
Apple's
this? That's the
struggling at
really
the lows
impossible
here.
thing. So that's why next week the Fed meets, not going to do
Microsoft
anything.
kind of being
They'll
pinned
put out
down
a new dot
halfway.
plot, won't mean anything.
oh,
Amazon trying to push.
it won't mean anything because there's still too much uncertainty about what trade policy will
I mean,
be. Okay.
the pause on tariffs, the reciprocal tariffs, ends on July 8th. So July 9th, the president could come out with a totally revamped high tariff program if he doesn't get any more deals. And then anything the Fed said next week wouldn't make a whole lot of difference.
Which is why I feel like we need to bring back
trying
fan
to
chart.
push. Let's see, we got a new 15-minute
Yeah, but they don't really talk about that. They
candle.
have the dots. Like I feel like this is the perfect opportunity instead of the dots.
Small
there
caps
has been a lot.
pushing
There
in,
was a lot of
Fed
talk about
retracing.
the Fed should do the Bank of England and do fan
Yeah,
charts.
exactly.
So it's a fan chart?
A couple of years ago, it's
like different scenarios.
Okay, so it opens up like a fan. I
It
see.
shows you the Fed's path is the median, and then it shows you the upper and lower bounds of their forecasts. And a couple of years ago, they started providing them, and nobody looks at them. So,
Do that on next Wednesday.
well, that'd be kind of hard to.
Yes, he doesn't want to do it. That's what I'm saying.
Well, for me to stand on TV and go like this, you know,
He's a fan.
we
Yeah,
got
all right,
that.
fair enough.
but
But to the point, there's
you
just
can
like
look it up yourself.
Sweet.
No, you can just tell me the next day. All right, Mike, thanks.
Yeah, that's what I was
Thank
trying
you,
to
Bloomberg
figure
International
out.
Economics and policy correspondent
That's
joining
good,
us
that's
there.
good.
Right, because if you have a wide array of options, wide array of economic assumptions as well at the end of the day.
That makes sense to me.
All right, well,
Nobody
yes.
knows what's going on.
No, coming up, Adam Coons has put money to work in this market. Chief portfolio manager at Winthrop Capital Management will get his latest on the markets and what would make him more bullish or more bearish, or
Still
where's
the
the value
position
no
that I'm
matter what.
holding right
Plus,
here.
we'll play back for you some of the interview with
down
Andrew
on
Cuomo,
it.
New York City mayoral candidate,
did
former
average
New York
down,
governor,
but
speaking with Paul Sweeney
bit
and
more
Tom
than
Keene earlier.
I wanted
Wide-ranging
to,
interview,
but
and we'll break
stock is
some of
pretty
that
much
down
about
for
to
you
get hit.
in a
So
market
we'll see
where
if it
equities are
holds
not
or
really
not.
moving anywhere that much. Volume is a little bit mixed, and you have the S&P pretty much flat on the day. The Nasdaq up by 0.3%. This is Bloomberg Intelligence. Happy Monday.
Yep, it's really tech that is retracing right now. Small caps trying to hold, but I mean, tech was what was driving the push in the morning or to start out, so not surprising at all. Need it to move together. It's essentially dropping back down to VWAP. That's what it is. See if you go the push right here, it's at its midway point in this area. So if we're to hold, we want it to hold above like 530, 50-ish, which would be around the midway point. But we'll see. Apple's just looking pretty weak. It's been pinned down to the lows. Amazon rejecting here at the high again. Strong rejection. I don't know. Looks like tech doesn't want to hold. I mean, it's now making a new low, or like a lower low here, so it's reversing trend that it had in the morning open. But we'll see. SPY still right at VWAP. That's my fear though now though, right? It looks like it might be getting stuck under VWAP, but we'll see. Oh, little push here. Really just pinned at VWAP. That's what the market's doing. Slow today. Not a lot of movement, but I think movement, if you take a look back at the last week or so, usually between like 9 a.m. PST to around like 11 is where you've seen either like a change in trend or just a push to the upside, continued push to the upside. So we'll see. We'll see if these go red. I mean, they're all hovering right around break even. Small caps up about 0.5%. Tech up 0.2. SPY up 0.3. So right at break even. Amazon trying to push again. Needs that volume push though. Momentum's not quite there. Just don't like this. Looks nasty here on Apple, right? It looks like the longer it stays here, it's gonna dump. Probably aim for these lows. Apple's the weaker one.
Headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks drifting as the two biggest economies, the U.S. and China, continue talks on trade. Those talks taking place in London. As soon as, if we get any word, of course, we're going to bring that to you. One of the sharpest moves in the market coming from Warner Brothers Discovery, up right now 7.7%. Best performer in the S&P 500 right now. I'm just saying it was split into two companies. One will get Warner Brothers TV, HBO Max, and other studio brands. The other is going to hold on to CNN, TNT Sports, and other entertainment, sports, and news and TV brands around the world. Consumer expectations for future inflation. You heard Mike McKee talking about it. Improved across all fronts in the month of May. Household pessimism about the labor market somewhat eased. These are the findings of the latest New York Fed survey just released. Right now, the S&P 500, it is unchanged, right at 6,000.
Exactly.
102 points lower.
It is
and
unchanged.
the Nasdaq 100 right now, 36 points higher. That is up
it's
0.2%. This flash brought to you by Oracle. Attention growing businesses. Oracle offering
to
cut your current cloud bill in half.
Right, not even
to Oracle Cloud Infrastructure.
a quarter of
for
a percent.
new U.S. customers with minimum financial commitment. See if your company qualifies.
Looking to go red.
/Bloomberg. And we check the markets for you all day long right here on Bloomberg.
We'll see if Apple holds.
John Tucker, and that's
it doesn't look like it. It looks like Apple wants
thanks
to
so much,
do.
JT. Appreciate it. Alex Steele, Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to live from our interactive broker studio right here in Midtown Manhattan. You can also check us out on YouTube as well as any smart device that you have. Check us out on Bloomberg Originals on your smart TV, etc. All right, well, let's look at the market right at 6,000, right? We're officially in a bull market, but then kind of now what? What's the next catalyst? Adam Kuhn's Solutions Chief Portfolio Manager at Winthrop Capital Management, joins us now. Adam, I've been asking this question all morning. Do we need less bad news for the market to really move higher, or do we actually need good news?
What I would say is we need consistent news. I think the biggest issue for the markets is that uncertainty that comes from the whipsaw of policy changes. We got a deal, we don't have a deal, tariffs, no tariffs, that kind of thing. So I think once you kind of start to see that smooth out, then we can hit all-time highs again. Obviously, I think the momentum is in the direction of this bull run to continue. But that can change, right, at least right now, the way things have been going. That could change tomorrow with one news headline. So we're still cautious, but I would put it in the camp of, cautiously optimistic.
Have you altered maybe your stock bond kind of allocation at all, Adam, to account for this volatility?
Yeah, we did, and we've done a couple of different things. So for us, we had the advantage of, not because we saw this coming, but coming into 2025, given that valuations were, kind of at their, I'm not going to say they were, in a bubble or anything like that, obviously, but they were stretched. And we'd come off 2 years in a row where the S&P had returned over 20%. So we dialed back the risk just because of, we'd had such a good run. We didn't really
SPY going down, bonds catching a bid. Let's see what we play out here.
And so for us, the pivot really came when we saw the downturn into being able to add back to names that we had begun to underweight, like NVIDIA, and just simply taking them back to market weight, which was a win for us to, not capture all that on the downside, but then capture it back on the upside. So right now, we're moving back towards that, kind of trading this a little bit more, where we're starting to dial back the risk again. I do want to reiterate, we're not outright timing and moving to cash or anything. What we're doing as far as we're just kind of playing factors and shifting our factor exposure.
It's again Apple
to,
rejecting alongside Amazon here, right?
More defensive names. So since we've had this run
it's
up,
not holding.
And we're still thinking there's some.
If there's a move to be to the upside, you need to see Apple and Amazon break out of their lows. Well, Apple out of its low here, right? And Amazon.
So there's been a lot of talk about the U.S. exceptionalism trade, and it feels like what we've now learned
could be bear flagging.
Down maybe your exposure to U.S. equities a touch, and then just diversifying out, not like dumping U.S. altogether. Where do you sit in that narrative?
Yeah, so obviously, if you had done that earlier in the year, that's a phenomenal trade. Depending on the day, if you're looking at like the EFI index, international developed markets are up 16% relative to U.S. like the S&P 500. And that
really does look like a head and shoulder pattern with tech
really decade where, like
showing weakness.
The U.S. markets have really been the dominant place to be.
About like 3 minutes here.
Kind of like this has gotten a little too overrun. So for us, we're considerably dialing back the international exposure because. For us, it's one of those when we look at the back half of the year and, what can outperform. If the U.S. market does move into some sort of recession, which we are not calling for that to be the base case, but if it did, it would be hard for us to see a scenario where international markets like Europe and Japan don't also follow suit. And if the U.S. markets are
bounce here
off to the races, we think that would kind of create that the term obviously we use a lot is that FOMO trade.
Apple bleeding
back into the U.S. markets as soon as possible. So I think you would see in that scenario a rush back to U.S. dollar denominated assets.
It's about
obviously the dollar plays a big role in that. And you've seen it drop
60-ish cents away from making new low.
I think we'd see that get above 100. You'd see U.S. stocks pick back up. And not that the international stocks would go down, but they probably just kind of be flatlined as those allocations were shifted. So for us, we think that if you are overexposed to international, or if you did go overweight international, great job, prior to this year. Now I would shift back towards U.S. markets.
Adam, thanks so much for joining us. Always appreciate getting a few minutes of your time. Adam Coons, Chief Portfolio Manager, Winthrop Capital Management in Indianapolis, Indiana, with some good commentary there. Well, Bloomberg Surveillance co-anchor Tom Keene and we spoke with Andrew Cuomo, New York City mayoral candidate and former New York governor, in a wide-ranging interview. We began this portion of the conversation by asking Andrew if he is surprised that the Democrats haven't had someone big to challenge President Trump's presence. Let's take a listen.
First, the Democrats have to get the cadence of the game. They are coming up a day late, right? I don't believe this. I believe this immigration and Los Angeles, and it's going to get worse, and it's going to be New York. I believe this works politically for Donald Trump.
Amazon trying to push while Apple just bleeds out.
The budget debate, which is really
Let's see if we
consequential debate for urban America short term. And he's on to a new topic now. And the Democrats wind up a day late, because if you're arguing about the budget today, you're missing Los Angeles and New Jersey and the whole immigration debate.
We're going to wrap up here in a moment here for Bloomberg Television and Bloomberg Radio. Andrew Cuomo with his Politico. There was a mayor from Chicago who can be a little spicy named Emmanuel. He's out this weekend, and Rama's all wound up about the weak in the woke Democratic Party brand. And I would say he was basically... he is mayor of Chicago, and potentially you as mayor of New York are the ones fighting the fight to get the Democratic Party to get some backbone. Does that lead to a presidential effort in 2028? I mean, is the Democratic Party going to shift back to that centrist tendency that we talked about in 1985?
Centrist, forget the trying to define political ideology. I worked with Rom in the Clinton administration. It's sort of practical and common sense, right? The Democrats lost to Trump. Why did we lose to Trump? I don't believe Trump won. I believe
Apple going lower. Let's see if it holds here.
The Democrats became disconnected from their people. They became disconnected from the kitchen table issues. Talk to me about my mortgage. Talk to me about my job. Talk to me about the economy. Talk to me about public safety. I don't want to hear about these esoteric issues right now when I'm worried about my life today. And do something for me. You're the Democratic Party. The Democratic Party fundamentally believes in the functionality of government, and you haven't functioned. Show me something that you did for me that made a difference in my life. Joe Biden, you were president. What did you do that I can see, feel, or touch? That's where the Democrats blew.
Paul, this is so important. I want to get back to some of the basic stuff Paul was talking about. I mean, day one, the congestion tax. Day one,
doing solid on our long-term positions, RXRX, the SCO.
What's your day one mandate to those kitchen table Democrats, independents, and disaffected Republicans?
What they're saying first is,
gotta update my position there. I might be averaging down.
And I haven't felt that way in 15 years. Make me safe. And that is public safety, that's mentally ill, homeless, etc. Blending into quality of life.
Apple,
that's job
it's
one.
rejection. You're right, it comes from Apple. Look at it, it's bleeding out.
45 seconds because of all
We're
the
about,
what,
40 cents away from making a new low on Apple.
America with a convention speech. Are you going to be at a
Need the rest of the market to hold through its spill and then hope that it rebounds.
And that's enough.
There you go. That is Andrew Cuomo, New York City mayoral candidate and former New York governor. So, Alex, we had Mr. Cuomo for about 25 minutes, pretty extended conversation. And, of course, he's running in the mayoral primary, which is June 24th for the Democratic Party here in New York. Then the general elections in the fall. It's a crowded field. So we spoke to him a lot about
Amazon at the highs again.
Issues that he'd be running on. What are the key issues for New York City? And, of course, safety. Top of the list. And then we also asked him on some of these national questions. What happened, for example, in Los Angeles over the weekend? So wide-ranging interview. And he has obviously some very strong points. I think most people have a pretty good idea who Andrew Cuomo is.
Yeah, exactly. And what he's saying about kitchen table issues, like how much you pay for food, etc. And this will bring me back to an article that's one of the top read. Guys, get ready for it. The Food and Drug Administration said more than 20 million eggs have now been recalled after 21 people were hospitalized with salmonella.
Oh,
Just talking about, kitchen table issues.
Yep.
Apparently these eggs, everyone listen up, distributed by the August Egg Company and were sold to retailers like Walmart and Safeway stores between February 3rd and February 19th. 79 people across 7 states have gotten sick with the strain of salmonella linked to these eggs, and that's according to the CDC.
Great. So in case you didn't have enough to worry about, I mean, so we have the chickens now.
We have the chickens, and then now we have the
chickens are having the
salmonella.
eggs, but now there's some salmonella in the thing.
And we got to recall that, and then we'll see how that winds up going.
Because I
Symptoms
think egg
Alrighty.
prices have been coming down
coming down. Yeah.
because they're making more chickens, which was my suggestion.
Patience,
more
patience,
chickens. They're making more
patience.
chickens.
Looks
I
like we
just
are
used
getting
raw
that
egg
bounce. See
yesterday
how
to
that
make
bounce
carbonara
happens
sauce.
as
Yeah.
Apple
They stay over
tries to
outside of
find
there.
its
But
footing
then,
because the rest of the market is held
the
up.
fancy union market.
Amazon
'Cause that's
did
all we
make a
got
new
there. We got
high,
nothing else.
barely
All
by
right,
a
let's take a look
couple
at where the
cents,
markets
but
are. Let me see. Whole lot of
Amazon's
nothing
pushing,
is actually
and
happening here. The
Microsoft's just
S&P is
pinned
flat.
down
Nasdaq
again
up
at the
0.3%
VWAP.
Volume's not terrible though
But
for the
let's
S&P
see
and the
if the
Nasdaq.
market
But
gets
honestly,
a
not a lot of change.
push.
We're all looking forward to
We need a
WWDC,
bounce
the
from
Worldwide
Apple
Developer Conference for Apple in
to
Cupertino,
carry that.
California, later on this afternoon. Apple very much underperforming the rest of the FANG index.
Yes.
I don't know if we're
Exactly,
Mag
that's
7
what we're
world
talking
anymore.
about.
Back to the FANG acronym.
Yeah, I don't know. But these conferences, these developer conferences used to be real market movers.
Oh, yeah.
Okay.
Less so these days.
I mean, maybe we've already priced in the
Position
lack of
pushing
market.
up.
Yes.
I don't know. We will
AI.
see. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, will be joining us after this. This is Bloomberg. Happy Monday.
Let's see what sort of push, if any, we get.
Order filled.
Okay. Our break even's at 614 for our current long on ES. So we needed to break around the 599.83-ish mark. Really 600 ideally is what we want to see a break of in order to come out of this clean. Let's see if it holds. Apple trying to push. There we go. We got that breakout from Amazon. It's looking pretty clean breakout there. But does market follow? That's what we want to see, right? Is Microsoft going to follow? Is Apple going to follow? Qs as a whole, it's kind of pinned there again at VWAP. Yep, right at VWAP. So as a whole, do we get a push? Come on. IWM right at VWAP as well. Apple rejecting. Is this at VWAP? No. But that's what it kept rejecting up here. So we'll see. We'll see if it holds or not. IWM trying to push us. Apple really getting smacked. Smacked hard. The market pushing. About 2.5 points from break even on my position. So let's see if it happens or if we take a loss today. Apple getting smacked again. Again, about 40 cents away from making a new low on the day. Apple is. IWM rejecting at VWAP so far. We want to see a push and close above it. See, market trying to push. Market trying to push. Okay, we're now about a 1.5 away from break even on the position. So let's see if we get blessed.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Growing your own terms.
Apple just bleeding through, about 30 or so cents away now from making a new low. It's causing the market to reject here on the push, but let's see if we hold up. IWM small caps trying to push above VWAP.
41 points. That's up about 2
Let's see if equal weight can carry us.
And investors awaiting any sign of progress in the trade war. It's anybody's guess if the latest China-U.S. trade talks taking place in London today will move markets. Lori Calvasinas with RBC Capital Markets.
We do need to see, something pretty meaningful. And what we actually saw after that last China trade de-escalation was, our economists, as well as a number of other economists around the street, really raised their GDP forecast meaningfully. The question is something going to happen that's going to cause that kind of reaction again? We're just going to have to see.
And Warner Brothers Discovery splitting into 2 independent companies. The best performing stock right now in the S&P 500 up 7.4%. You should count on your electricity bill.
Apple bleeding through, and it's dragging the market down.
Year, mostly because of more
it's
expensive
about 20 or so cents away from making a new low on the day.
So that would bring the nationwide summertime average to $186 a month for your. Actually, it doesn't sound bad. Up from $180 last year. Just turn the air conditioner off and open the windows.
Open the windows. Okay.
I got a fan and everything.
But what about
Do they
humidity?
listen?
What about the humidity?
Whatever.
There's no breeze in Brooklyn. There's no breezes in Brooklyn.
There's no. You have the humidity, then the humidity
No,
seeps
open a
in.
window and use a box fan. It's much cheaper. Stop turning the air conditioner on.
The humidity gets in.
By the way, I'm not talking to you. I'm talking to my kids.
No, understood. Yeah. I figured. All right. Thank you very much.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Also on your smart TV, search Bloomberg Originals there. Mandeep Singh joins us, Senior Tech Analyst for Bloomberg Intelligence in our studio here. Lots to talk about. I want to start with the Apple event. Alex and I, they got their developers meeting out there in Cupertino this week. And I remember when this used to be like a really big deal. It's not so big anymore. And if so, why not?
Well, I mean, it depends on where you're coming from. I think for developers, it is a big deal.
Okay.
They're not going to launch any new devices at this show, but clearly in terms of operating system and, AI features on Apple Intelligence, I mean, this is the event.
What's the take on the street, Apple and AI? What's the feeling about Apple and AI?
The consensus opinion is Apple is lagging behind when it comes to AI. And look, they have an integration with ChatGPT, but people don't use it that much because it's not intuitive as it is on a Samsung phone where Gemini is integrated and
Let's see, market pushing back up, trying to hold here as Apple tries to hold.
Look, I think in the end, it comes down to Apple still having that distribution that no one else has. People aren't really switching their phones. No one that I know of has switched from an Apple device to a Samsung because the AI features are better there. And until that happens, they have time. So they will figure out how to best use the models. If the model layer gets commoditized sooner than expected, then it's actually a positive for Apple because
they don't have to differentiate.
In
the same way.
Hardware to me is the real lock when it comes to smartphones. People are just so used to using their Apple devices that it's a very hard sell for them to
my
move
oldest he's an engineer, he's an Android guy, and he tried to explain to all of us, all the rest of the family, how we have to switch because it's better technology. And we're like, dude, just let it go.
I don't understand how to type on an Android phone.
Yeah, I don't know. It's just, no.
Seriously.
But this is to your whole point.
Yes.
That said, so if Apple's sort of like secure business model is
Microsoft
secure,
pushing
and
to
it's
new
not gonna
highs
go anywhere,
here.
it's just a matter of like fine-tuning it.
Apple looking
right
like it's
model,
rounding out.
What else are you
Oh,
looking
let's
at?
see,
So
market-wide push, I think.
So services business is
Feel
what
comfortable
really
adding
drives
here.
the terminal value for Apple. Look, everyone is fixated on refresh cycle and when people are going to upgrade their phones. To me, what a lot of people miss is Apple has about 1 billion subscribers that generate services revenue of around 108 billion this year. Think about the magnitude of that business. Apple is considered a hardware company that's got a services business, which is predominantly software subscriptions, 1 billion subscribers, which continues to grow. There are a lot of first-time Apple device buyers, and anyone who buys Apple
Okay, Amazon rejecting a bit.
Hold on a second. Then go back to the AI part, because if they
Wanted
had
to
1
see
billion
round
users and they were
out.
able to offer something material for AI for like $5 a month that everyone wants to use, that's a lot of money they can generate, but they can't get there.
About close.
And that's the bull case.
See if Apple can
right
hold.
Now, everyone is writing them off saying, oh, Apple hasn't figured that out in AI, but they don't have to figure it out. They can just offer the best model usage on their platform and charge for it, and that will contribute to services revenue. Services revenue has got a 75% gross margin.
Yeah.
All right. We'll stay on the AI theme because that is the tech story these days. Meta set to throw billions at startup that leads AI data market. What does this mean?
Well, so we know Meta has their own large language model, and they have open sourced it, but still the adoption continues to be way lower than all the other models like OpenAI's and Gemini and what Scale AI offers is data to train your model. So all these companies, whether it's OpenAI, Anthropic, or Google, they use
some of tech
AI
pushing
data
up,
to
but it's
train
getting
their
smacked down again, right? Microsoft didn't get the
Meta
break.
is doing is what Microsoft did very early
Struggling
on with
here
these
at the
large language
high.
models, invest in OpenAI.
I mean,
So Meta is
Microsoft,
betting on
Amazon
Scale
got the
AI
break,
to be that
trying to
company that
hold.
everyone wants
Apple's
data
just
from,
bleeding though.
and they want to be the biggest
Looks
investor.
like it
Remember,
wants to
these
round
companies
out
can't
here
make any
and kind of
acquisitions.
find
They
some
have to
footing,
do
but
acqui-hires or,
it's really
some,
only about like
these
40
type of
cents
deals
away
where they
from
get a
making a
big
new
stake.
low of
And
day.
eventually, when Scale AI goes public,
So let's see if
or it
market can
really
hold here and
scales up in
push.
revenue, then Meta happens to be one of the beneficiaries. And also they get the data because, as I said, their model is really trailing everyone. In fact, DeepSeek adoption is way higher than Meta's model adoption right now. Both are open source, yes, in the leaderboards. And so they need to improve their model.
What else is on your mind?
Oh, the Apple conference. I mean,
So that's still your jam. All right.
is, and in the end, it comes down
Oh,
to
man.
how much AI is going to contribute to revenue growth, because that's the single biggest driver out there, from chips to software.
Yeah, Apple
to
dragging it
everything
down
related
again.
to tech.
See, so it does matter. So I asked Mandeep what he wants to talk about, and that was literally just
Holding
that was
things
it. So
back.
there you
It's
go.
bleeding
AI
out.
for dummies
About
again.
30 cents away
Version like
from
520.
new low of day.
Learning versus inference. Is that the way to break it down? And what are those two things?
Yeah, training versus inference. And so inference on your phone. Again, what Apple will likely show today is you can do a lot of inferencing on your phone. You don't need to go to the cloud to run ChatGPT. There's a use case for Siri to incorporate a large language model, do inferencing on your phone, where you don't need to make a connection to the cloud. It's all private. The data on your phone is using a large language model to act as a voice assistant. And that's another use case where Apple just sits perfectly. I know they don't have the best large language model right now and everyone thinks they are behind, but where else are you going to deploy your voice assistant? It has to be the phone.
Right, yeah. So to answer your question, inference is like the stuff that you and I might use.
Okay.
LLMs are the big trainings that then help us use that.
Ah, okay.
So one's the big hyperscalers, large language models, and one's like near us where we can use it.
Because somebody at the bar at Shipwreck tonight is going to ask me about this, and I need to have the answer down.
Okay, there you go.
Say, hey, you're smart.
Did I dumb it down enough? Like, is it? And we're here. I think you got it.
Yeah.
All right, Mandeep, thanks a lot. We always appreciate you. And Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, joining us there. Still pointing out, as long as people are buying the iPhones and have an iPhone, switching over is going to be really hard. Therefore, thus, they're going to be okay when they eventually.
New 5-minute candle here. Apple pushing, trying to. Market wants to push as a whole. Look at IWM. Look at Qs here. Our position is now about half a point under. Let's see if we go green.
Unless I'm really wrong, and
this is where we're currently
possible,
sitting
we're gonna
at.
figure that out and break that down. That's coming up next. This is Bloomberg
Smacked right at our
Monday.
break even. Let's see if it breaks. So first entry was here. Average down. Average down. So let's see if we get the break. We can exit with some profit here for the day. This is realistically what I'm aiming for, is this high of day. If we see market-wide push, if not, I'm just gonna exit. A dip back below here, a touch on VWAP. So let's watch the market. Let's see if we push as a whole. Again, Apple just rejecting. We need Apple to actually hold and push alongside for this to actually get a market-wide breakout. Or at least make it easier, right? Because right now, again, it's about, what, 35-ish cents away, 30 cents away from making a new low. But as soon as it finds its footing, if the rest of the market holds, we're getting a push to new high of day. All right, we are now in profit on our trade. We're up about half a point. See here, we're going break even, green on our trade. So I'm watching that as we see the market push here. Got about 3, 2, and yeah, about 2 minutes here left on this 5-minute candle. Well, 2:10. Alright, we're up half a point here, we're up a point. Okay, awesome. Let's see where we can take this. Oh, it's getting smacked back down. I really need Apple to push there. I mean, Amazon made that new high on this 5-minute candle, but if Apple can hold, we get market-wide
push. This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, it seems like everybody has a branded credit card. We're going to talk about that in just a moment. Alex Steele and Paul Sweeney live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Walmart credit cards returned to Synchrony after fintech hack. Everybody's got the branded credit card, including our good friends at Walmart. Ben Elliott joins us, consumer finance analyst for Bloomberg Intelligence. Ben, talk to us about Walmart here. It seems like a big deal for Synchrony, because I thought at one point Synchrony was the financial partner of Walmart. So fill us in what's going on here.
Yeah, so they had it for about 20 years, right up until 2018, when the renewal sort of negotiations between the two companies got contentious. Walmart was demanding too much from Synchrony, and so Synchrony
now let's see if this push holds or if it's going to get smacked down.
And so this is an equally large deal that
they're Apple looking like it wants to push here.
Why did it go away?
So the way Synchrony works is they have these large partners, right? The top 5 partners are more than 50% of their net interest and fees. And what they do is they share the economics with the partner programs in something called a retailer share arrangement. So every couple of years, the partnerships are up for renewal, and Walmart is a gigantic corporation. They have huge leverage. And they were demanding essentially more economics than Synchrony.
I want to see a hold. New 5-minute candle here.
Ben, talk to us about these kind of branded credit cards, if you will. I mean, my daughter is a master at managing points and doing all that kind of stuff.
It's like a full-time job.
It is, but it pays off every time she's traveling somewhere. It's on points. Talk to us about that, the business of those kinds of cards and kind of the economics.
Yeah, so Synchrony is not so much in that business.
They're trying to hold them.
A credit option, usually to sort of a lower credit worthiness, lower income borrower.
Up about half a
really
point on our position.
Partner. So this partnership is going to be
right around
be 2 cards.
that break-even marker.
That kind of does what you're talking
I want to see
about.
market actually hold this.
Sort of value proposition will typically be a little bit lower. The card will be more accessible, and then the other card will be just used at Walmart. And details are still pretty light on what the reward structure might look like, but the goal is to drive throughput at Walmart and not necessarily at sort of other retailers.
So they also have cards with like JCPenney, Lowe's, Amazon, PayPal, for example, and you mentioned sort of a different type of band of consumer. How is that band of consumer doing?
So Synchrony likes to say that they're managing, they're not thriving, and they're not struggling. This is it's sort of like a subset of wallet share, right? So this is the Synchrony is just seeing how these consumers are behaving at a single retailer for the most part, but there's not a lot of stress. But if you look back at 2018 when they first decided not to renew the Walmart partnership, it's kind of overnight their charge-offs went down like 60, 70 basis points. So presumably this particular customer set is charging off a little bit higher, like maybe 1 percentage point higher than your typical borrower. So there's going to be, it's an interesting time for Synchrony to go out and look for these sort of more marginal buyers, basically to get growth.
Ben, your coverage of consumer finance companies, you get a good view, those companies get a good view of how the consumer is doing, how they're spending their money. What are you hearing from these companies these days?
So if you look across spending categories, everything is still
big rejection here.
A couple percentage points
not big, but
GDP. There's one
not
obvious
the hold
standout,
that we
which is
wanted
travel,
to see.
which is basically people cutting back on their most incremental spend. But if you kind of think about travel, right, you're booking your flights a couple months, maybe a year in advance. And growth in that category is down double digits. So if you kind of extrapolate that forward, will we see a similar shrinking in hotel spending, entertainment, leisure, things like that? Could be a little bit of a canary in the coal mine.
What is Synchrony's flexibility when they're managing, when they're saying that their consumer isn't thriving and they're not dropping off, but they're managing? What does that translate
holding at break even on our trade?
Well, so this goes back to what we talked about, the retailer share arrangements. So you share both the profits and you share the costs, right? So, if charge-offs were to rise, the retailer, in this case Walmart, is going to pick up some of those charge-offs. So that kind of softens the blow a little bit for Synchrony as an issuer. But they have other sort of tools in their toolbox. One big one was the late fee, which CFPB had been trying to cap at $8 instead of about $30. But they can use those things like that to incentivize borrowers to pay even when it gets to be more painful.
Ben, are your consumer finance companies, are they talking about credit quality concerns at this point yet?
credit quality is still great. For companies like Amex, it's pristine, unimpeachable. But the thing to look at is delinquency, just the mechanics, the way charge-offs work. First, you have to go delinquent before you stop paying. And we're not really seeing any sort of increase beyond kind of like seasonal trends in delinquency.
I mean, that's a pleasant surprise. I would have thought we would have been seeing it a little bit more, but the consumer.
But Amex is would be a different type of.
Well, Amex would, but I'm talking just general credit cards. We haven't heard it too much yet.
Yeah, no, it's true. It's true. I guess the question is when. Hey, Ben, thanks a lot. We really appreciate it. Ben Elliott, Bloomberg Intelligence consumer finance analyst, joining us on Synchrony.
All right.
Well, that's a Monday.
Sure.
I mean, we'll see if we get any movement anywhere so far this week. We do have PPI and CPI, so that's something, and
Wednesday,
any sort of
Thursday.
headlines that come out of trade deals. But again, it's like, do you just need less bad news or do you need good news?
Right.
What really propels us to take out that all-time high?
Yep, exactly. So, but mixed messages on the market today, with the S&P up about 7 points, the Dow down 28, and the Nasdaq up 61. So not a lot of direction. I'm going to quote oil for you. We're at $65 for WTI crude.
That's a comeback.
That's something.
And that's with OPEC announcing that they're going to continue with hikes. Morgan Stanley, though, saying that potentially you're not really seeing the impact of those hikes from OPEC Plus in the actual physical market. All right, for our listeners in the U.S., here's a reminder for you. You can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius
here,
XM,
but
channel
overall
121
market's
is presented
holding.
by Ship Station. Stay with us. Your top stories and global business headlines are coming up right now on a very calm Monday morning. This is Bloomberg Intelligence.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Cammie McCormick in Los Angeles. After 3 nights of protests over federal immigration raids, the destruction is evident. Rick Montanez is there.
A lot of damage and destruction out here. We are just off the 101 freeway across from one of the federal buildings, a few blocks from the Federal Detention Center. And you see these cars here. These are Waymo cars that were vandalized and then set on fire, and they burned down to the ground completely. We're still seeing a large police presence, but at this point, not really much in the way of protesters, at least not yet anyway.
In the meantime, the governor's threatening to sue over President Trump's deployment of the National Guard. Legal analyst Jessica Levinson.
Governor Newsom is saying you're invading on state sovereignty. We don't want the National Guard to be federalized. And not only did we not ask, we're actively saying we don't want them here.
Scott McFarland reports on the latest on the Maryland man mistakenly deported to El Salvador and brought back to the U.S. to face charges.
Apple pushing here. Let's see if market can get a market-wide push. Amazon at the highs. Microsoft not so much, but it's holding there.
Has brought 2 felony charges so far against Abrego Garcia, with the Department of Justice leaving open the door to perhaps bring more.
President Trump's new travel ban took effect today. It bars citizens from 12 mainly African and Middle Eastern countries, as Stacey Lynn reports.
The president says the ban is necessary to preserve national security and prevent terrorism, saying the countries had deficient screening for passports.
All right, we're up again here about a point or so. Let's see how
The Trump-appointed head of the National
or
Institutes
where the
of
market
Health calls
takes us.
dissent
Pretty
the
significant
very
push here
essence
on
of
Apple,
science.
right?
Today, health workers
Taking
wrote
a
him
look
letter
here,
that said, we
right back to
dissent,
VWAP.
and outlined
So
how
what we
new
want to see is
policies
Apple
are
actually
impacting
break
their
and
work.
hold
Jim
VWAP.
Priscilla has that.
The
We
letter says
have
Trump administration
about,
policies waste public
what is
resources
this?
and harm the health of people worldwide. Jenna Norton signed the letter.
What is happening
About
at NIH
2 minutes, 10 seconds left on this candle. So we want to see a break and hold above VWAP there.
The
We are
NIH
currently
workers readily
up
admit they have jeopardized their
about
jobs.
a point on our trade, like
Place in London between the
$150.
U.S. and China. The White House's Kevin Hassett.
The purpose of the meeting today is
So,
to make sure that they're
let's
serious,
see.
but to literally get handshakes and get this thing behind us.
Investors on Wall Street are carefully watching for any signs of progress in those talks. On Wall Street at this hour, the Dow Jones Industrials are down just slightly, about 28 points, and the S&P 500 and NASDAQ are flat. This is CBS News.
Nope. Getting smacked. All right, well, we're going to call it a day there. Thank you for joining.